Hello, thank you for attending today. My name is John. I'm here with John Edwards, also I'm John Oganowski, and also Charles Melita to give you this presentation. So I'll be starting off, and it's a topic that's come up a lot in our industry with the turnover tsunami, the lack of finding skilled labor also, but the fact that the job market is so good that people are leaving jobs. Also, a large amount of people have moved to retirement over this time. So let's click on the next slide. Oh, and here's a little bit of my introduction. I am Human Capital Management Managing Director with Paypro Corporation. I have about 20 years in the industry, way too long in the industry. Paypro's been around a little over 30 years, actually. Let's move to the next slide. Okay. So as we start talking about this, really, this is it a blip on the radar, or is it something that's going to become a disaster for a lot of companies out there? Companies, across the country are reporting record high turnover now, as well as not having the ability to hire the skilled labor that they need. Next. So earlier this year, this was a study that was done, and they sampled 2,000 people in the U.S., 2,000 employees, and 52% of them said that they were planning to look for a new job in 2021. That's an increase from 35%, almost 50% higher than what the year previous, and the year previous in 2020. We know how that year went with people looking for new jobs and such, or with unemployment and such. So it's really something that's growing and not on a lot of people's radar. It's just happening. Next. So when you look at turnover, this is a calculation done by SHRM. It's usually about 6 to 9 months of a salary, they're saying. I've heard as high as 1 year's salary. But when you break it down to just a entry-level employee nowadays at $35,000 a year, probably somebody making $17, $18 an hour, the cost to replace them is somewhere, between under $20,000 and over $25,000. So organizations now, it's not uncommon to see a churn rate of 25%, 28% in an organization. And we're not even talking about like restaurants, fast food, like quick serve restaurants. They're seeing more of 100% turnover or more. But 28%, if you were to lose 56 employees next year at a cost of $20,000 an employee, we're talking over $1 million cost to the organization for hiring, for posting those jobs, for lack of productivity, overtime payments. Those are things that go into this price of turnover. Next. And really, I always like to break things down to the why. And why are people actually changing jobs now? Well, of course, it's always the more money, better benefits, but a lot of things in the past, year and a half plus, remote work options, better work-life balance. With people now with schools going, the high school in the next town next to me just went virtual until December because they had a COVID outbreak, and they're virtual. Now that's high school, but it'll trickle down to elementary schools and middle schools. So parents need the ability to be home with their children and have that, remote option, as well as everybody that's gotten remote in the last year has gotten a taste of how that working option is, and people actually like it. The other thing is really, it has been out there for a number of years, lack of recognition and promotion. Going back to when the millennials got in the workforce, A lot of millennials, they would change a job because they weren't getting the recognition at the job, not really that they weren't getting paid enough money. It's really they wanted that satisfaction and recognition for doing a good job. Next. And I always like to look at, what can be done? How can you be proactive? And really identifying turnover patterns in your organization is the first thing, seeing where those trouble bubbles are in your organization. And utilizing HCM software to do that is a key thing. If you're tracking which supervisors or tracking your employees, there's ways of tracking even to see where the turnover may happen in the future by using predictive analytics and seeing it before it happens. And then, targeting those areas, to make an impact. And the honest thing is you have to plan for turnover. Nobody likes to, everybody thinks, everything's good, but organizations now, everybody's going to see it. So knowing that and planning for it will help you in the future. Next. Other steps, finding and listening to your employees. Companies actually should be doing exit interviews. A lot of companies, fail when it comes to the exit interview and finding out why people are leaving. But a lot of companies that are being proactive are doing stay interviews, and that's a big thing now, where they're communicating with their employees frequently and finding out why do they stay, what do they like about working at the organization. Again, offering those remote hybrid work options when possible, and really putting a plan together of how you're going to do it, not just you'll work from home and you have a laptop. Do you really have the proper space to work in your home where you can, be free of interruptions, maybe the proper desk? A lot of people, especially in cities like Manhattan, don't have that space to really work. They're sitting, on their couch or in their bed working, and it's maybe not the most productive place to do that. Other things like succession planning, seeing how ready your organization is for key employees. If they were to leave or retire, what's the, who's going to step up and take that role? And seeing where maybe you have holes in the organization that you might have to recruit or help build up employees so they can move up in roles in the future. And doing all this using your software for getting those robust analytics and again, looking at where maybe turnover patterns are. Next. Other steps to take, companies are looking at employee perks. What can they offer? Things like casual Fridays, again, remote work options. There's a company I've worked with here, somebody who working with about becoming a client of ours, and they actually offer their employees Netflix subscriptions. So every employee gets a Netflix subscription, which what does that really cost an organization? Maybe $200 a year per employee, but it goes over big with the employees doing something like that. Thinking outside the box of what can we really offer our employees to make their lives better and make them happy employees. Things that, my next person will go into health and wellness benefits and how that could help with, capturing those employees. And then retirement plans, profit sharings, other key financial drivers that might not cost the organization a lot of money, but will definitely help you, locking in those key employees with the golden handcuffs. Thanks. And then, talking about this tsunami in, the words of Eddie Vedder, I'll ride the wave where it takes me. Unfortunately, it's something that, moving forward, organizations need to just really embrace what's happening and come up with their own plans and use some of these practices and other things that they come up with and keep moving. Thank you. Next. So now I want to introduce John Edwards. And John Edwards is our benefits practice manager here at Paypro. He works with organizations to help them, put together medical benefit plans, wellness plans, and he's going to talk a little bit about, health and wellness. Hey, John.
Yeah. Hello. Um, so yeah, riding the wave. Um, so yeah, very interesting concept. So essentially, when employees, I don't want to say on board, but when they come to a corporation, they're looking for a future, right? They want career path. They want a next level. They want the best thing for their family. So right. So what we do at Paypro is we're helping corporations in your space to attract and retain top talent, and we're doing that by helping our clients or potential clients become what we call the employer of choice, and we're helping them really implement a strategy called total rewards. So all the nooks and crannies, all the things that employees love. Um, Paypro, me, John, and Charles is going to be speaking soon, help companies your size implement these total rewards, these strategies. Um, and the first step to attract and retain top talent, obviously you want to keep who you have, right? And you want to bring other people in, and you want to keep your key employees, and you want to keep your key men. But it does start with what we call the red carpet. So, I'm also in SHRM, Society for Human Resource Management. There's a thing called the employee life cycle. So an employee starts to onboard or talk to a recruiter or hit their web page, or they find your job rec online and they're reading it. That really starts kind of the experience. And what we do is we help companies and we coach them through becoming what we call this employer of choice. And we actually link, and what we do is, what you do as a corporation externally for branding and marketing, we actually talk and map it through, hey, what you do to your consumers, you really should do to your employees as well, right? Internal branding. Um, so we have conversations and we help our clients with these strategies, and we kind of map out um, the plan to help your employees really fall in love with your corporations. If you look at some of the major brands out there, I'm a Steelers fan, so we got Steelers Nation. I'm also a soccer fan, so you got Barcelona. Look at the following that they have, right? So they're able to create a culture that is appeasing to their current employees. So what we suggest is really doing, and what John alluded to, is a survey. Survey your employees, find out what they love about your company, what they like, what they dislike, what they would change, and you'll get some really, really good information. The common things out there when it comes to culture and attracting and retaining top talent, employees, they want to be part of a company that has a purpose. They want to be attached to a company that has a culture of wellness. So we're going to talk about wellness. And there's also a thing out there called ESG, environment, social, governance. Especially the newer generation coming out of college, sticking their toe in the workforce. Things that we experience, like Bear Stearns and Enron and the mortgage crisis and the economic crisis. So those newer, younger generation, they want to work for a company that's ethical. They don't they don't want to be part of the next Enron. So we're working with our clients to really help them establish a culture, and wellness really is coming up more and more. So employees, they'll gravitate. It'll help you attract and retain top talent, and you'll really see. Well, if you're experiencing turnover, you'll see that turnover reduce. You'll see more longevity. So our wellness plan is built off a SaaS-based program. So I like to say we have 4 pillars in that platform. So we have mental illness, diet, exercise, and telemedicine as well. And I can get more into the detail about that, on a later call. You can definitely contact me. What we're also noticing is there's multiple generations in the workforce, right? So we have the baby boomers, we have Gen X, Y, and Z, and each one has their own particular needs per se. So the baby boomers, they have more family needs, so they're looking at retirement, or they're probably about to exit into retirement. So when it comes to a benefit strategy, we also work with our clients to formulate and create a strategy to fit most of those benefit generations. So the baby boomers, their mindset is on retirement. So we help them, we help the employer really put together a benefit strategy that's more applicable to the baby boomers. And at the same time, the millennials, right? When it comes to benefits, medical, dental, vision, disability, those things are really not on their radar, and we help the employer educate them on their options. So when it comes to a benefit strategy for medical, right, a low deductible plan is really good for a baby boomer. On the flip side, a younger millennial or those coming out of college into the workforce, they don't go to the doctor as much. They might go for their wellness visit, but they're pretty well, they're strong, they're healthy. So a higher deductible health plan with a health savings account might be a better strategy for them. Now, where the wellness comes in, right, it's going to help you attract and retain top talent. It's also going to keep your employees healthy. So healthy, happy employees are more productive. And it helps you also keep your claims down. So the premise of implementing a wellness plan is really to get the employee under the care of a doctor. So they go in for their checkups, because what we're finding, and we're looking at the studies, those employees that are under the care of a doctor, if the doctor is able to diagnose a stage 1, stage 2, or something, right, versus stage 3 or stage 4, is more beneficial to the employee and the employer. To the employer, with a nice wellness plan, we're going to help them keep claims down. So if you keep claims down with the health savings account, with the health reimbursement account, that's going to help save the employer a lot of money. Claims are down, premiums are down, so that's a win-win. As for the employee, they're under the care of a doctor. Any diagnoses that come through, the doctor is going to catch it at stage 1, 2 versus 3 or 4. The benefit there is the employer's, saving lives, and also to treat a patient in a stage 3 or stage 4 stage is more costly to the employer, and at the same time, it doesn't really bode well for the employee, because they're going to go through a lot of trauma to get cured. So we help the employer really put their hands around a nice wellness plan, and we do it with this platform, and it's really consumer driven. And we help the employer really set a nice culture, because like I said, employees, especially those coming out of college, or you might have employees on staff now, and they're sitting there and they're thinking, where's my future here? What's really keeping me here? So the studies are saying those employers that are implementing a nice culture, either wellness or something around the environment or social or governance, employees are sticking around a lot longer. So again, we're helping employers create more of a brand identity. Wellness is always popping up. It's a big hit. And it's definitely a great driver to help attract and retain top talent. that's all I have to say right now. I could obviously go on a little more, but I'm going to throw it over to Charles. And if you want me to circle back with you, any of the attendees on the phone, you can reach me on my email, jedwards@payprocorp.com. So from there, Charles, I will hand it over to you, and you can take it from here.
Thank you, John. Good afternoon, everybody, and thanks everyone for joining us. My firm, Integrated Financial Concepts, we work with business owners to build C-suite and continuity of management in organization, focusing on employee and retention strategies that can help address this turnover tsunami or great resignation as we're seeing in the business world today. Next slide, please. So I just basically want to leave you with some questions to think about, because I think the market that John and John have talked about is definitely a problem right now. So I have a question for you. How do you acquire and retain top talent today? What are you using to get those? And are you paying an arm and a leg for compensation and benefits? What do you have to do to pay somebody to bring them on? You have to pay them a higher salary, most likely. Well, we're going to talk about strategies that don't necessarily mean you have to pay them a higher salary. Next slide, please. Think about the process for your last hire. How long did it take? What did it actually cost you in time and money? And not just the salary itself, but what did it cost you to train that individual? John O talked earlier about the cost being estimated at 6 to 9 months as a salary. But sometimes you have certain people who have intrinsic value in that business, knowledge of the process, maybe a CFO, maybe an operations director. You can't necessarily just put a price on that knowledge for a transition. What did it cost you, in your time to bring them on board, and how much value do they have? If you've retained them, or did they move to the competition? Really, the question is, what benefits can you offer that are discriminatory, that you don't have to offer to everybody? Is anybody here on the phone? And by the way, if you have questions, please put them in the chat, and we have someone who will monitor that as well. But my question would be: is there anyone out there who's in an organization that's in the middle of a transition? Whether you're trying to acquire another company, sell your company, or transition into another existing executive or member of the family. What's the impact you'd have on that transition of your business if you had a C-suite team or operations team that was secure before, during, and after the transition? It wasn't looking over their shoulder about if the company coming in was going to take us out, bring their new people in. What tax bracket are your most valuable employees in? How would they perceive receiving a tax-free benefit versus a taxable benefit? For you people that manage payroll or compensation, what happens to a check when you write it for salary? It's gone forever. It's an expense. Some of you on the phone might run nonprofit organizations or other entities. How would you folks feel if you could turn an expense into an asset and help retain top talent at the same time? Next slide, please. Here's a response I get all the time: but I already have benefits. And I say, of course you do, everybody does. But if I can follow up with 2 questions, what benefits do you have that your competition don't? I'm going a step beyond the health and wellness benefits that John Edwards just talked about. What do you offer your key hires that they can't get anywhere else? Next slide, please. So I just want to leave you with this parting thought. If there was a strategy that provided matching funds up to the rate of $3 for every dollar you contributed, provided significantly more income for your employees upon retirement, had absolutely zero market risk, yet still had the upside potential for market gains, provided stronger guarantees to the principal of the investment, significantly more protection for the employee and or their family or the corporation, and provided them with more liquidity and flexibility that includes protection against devastating long-term care expenses, would you spend 30 minutes to understand how this works and how it's accomplished and how it can help you acquire and retain that top talent? Next slide. How could you use this as a recruiting tool? Would this put you in an advantage above your competition? How would a benefit like this enable you to recruit and retain that best and brightest talent? And everybody thinks, I'll just ride the wave, but what are the risks of doing nothing? You run the risk of potentially losing that person during the most key time of your business, whether it's growth, transition, or straight out to the competition. So thank you very much for your time, folks. And Ingrid, is there any questions in the chat that we can answer?
Not at the time at this moment, but we do encourage anyone, if you have any questions, please put them in the chat. We'd love to make it as interactive as possible.
I see a couple here. Hang on a second here. Something just flew in. Yeah, go ahead, Ingrid. You can go ahead, read that question out. Seem to have lost Ingrid's audio for a second here. Let's see if I can find that question. Sorry, folks. Some technical difficulties here.
Hey, Charles, actually, I think I can see one.
I see one too now, finally. Yeah. Go ahead, Johnny. Go ahead, read it out.
All right, if I can read it, I'm reading it through the chat and the Q&A. I think this one looks like they were typing pretty quick. It says, does tech and key benefits really attract and retain employees? So
I can help
Charles, you
answer
want to
that
feel
a
that?
little
Johnny
bit.
O, you
Yeah,
want to feel that?
I can help answer that. It really does come down to a comprehensive package that meets the employees that you have working there. And in a mixed environment where you have some millennials and some baby boomers and some Gen Xers, you really have to have the flexibility to address all the employees. I think that's what the key is here. I see another question here. I'm a small employer. I don't think any of this applies to me. Well, that's a great question because we've heard that before, and there's a lot of feedback. Can anybody go on mute, please, if they're not speaking? And the question is, I'm a small employer. I don't think this applies to us. Well, actually, the cost of acquisition and retention in top talent is hitting all sectors. I mean, I drive by and I see ads for everything from, fast food restaurants to gas stations. And in talking to business owners, I actually hear them looking for top talent as well at the management and C-suite level. So I think it does affect everybody. And that's where the opportunity might be to have a conversation with the three of us to talk about your situation and coming back with a customized, personalized plan that addresses the needs for your company, because I don't think there are any two that are the same with the same issues.
Nice. Actually, I saw a couple more come through. Well, here's one. It's general, but I think it hits home. It says, what are employees really looking for? So if you're looking to attract and retain top talent, I guess the question is, what are employees really looking for? I don't know if Charles, you want to feel that, or if John O, you want to feel that?
I can take that. John, you want to take that?
Yeah.
Sorry.
No, that's great. That's great. Go ahead, and I have my take on it.
No, I think from my side of the ledger here, where I'm working with executives and key individuals is kind of my focal point. I think a lot of times business owners who give bonuses for performance or incentives, what typically happens is the second year after that employee has received that bonus, they come knocking on the door and they say, "Where's my bonus again?" So a lot of times money is not always the cure, because then the employee's looking for that on a continual basis. You set the standard and the expectation of it coming year after year, when in fact there are strategies out there that actually can provide better solutions, more flexibility, liquidity, and actually cost the employer significantly less, or actually sometimes even turn an expense into an asset based on your situation. So in the key employee role, that's where we found a lot of strategies to be beneficial, is focus on the individual situation itself. Go ahead, John O, if you have something else to add.
So, again, monetary, everybody sometimes thinks it's monetary, but a lot of times it's really how your employees feel, how they feel on the job, how they feel being, wanted, and that they're doing a good job. So recognition is another thing. I have a new client that is a medical practice, like pain management chiropractic practices. And a big thing for them has been employees being able to give other employees recognition using that, and some rewards also, rewarding them with either gift cards, like Starbucks or Burger King gift cards, or even like time off, added PTO based on how many, badges of recognition you get over, a certain period of time, like over the year. I've had a company in the past, it was a software company, and they used this feature, and whoever got the most impression badges over the entire year from January to December 31st got 2 tickets to Hamilton on Broadway. So it's something that for the organization, relatively low cost. For the person, it's something that really means something to them. And it's really about doing a good job. And a lot of people, that's what they want. You want those, employees that are actively engaged in your organization and keeping them engaged, so they don't, of course, get disengaged or, disgruntled.
Good point. Good point. And a good recognition program is always best. Everyone wants to be a superstar, and they want to be recognized for it. Here's a question. It's probably more geared towards John O. It's a little, I don't want to say granular, but how does Paypro fit into all of this? That's probably a John O question.
Well, depending on what your organization is doing, with your current, payroll, HCM, HR system, a lot of companies haven't had their systems built out to the fullest extent that they can, or their systems maybe are lacking some tools. But having those robust analytics and the data in the system, more data in, better data, better tracking. Being able to track things like turnover, tracking employees, their drive time to work, and maybe, also from the recruiting standpoint, looking at, okay, here's the people that we hire. We get, 70% of our people from Indeed, but we get better people that have more longevity or are more productive, have better performance reviews from LinkedIn. And being able to track that right from the hiring process, moving through that full employee life cycle, it can help you make decisions on where you're hiring people, or if you had two candidates. Again, if LinkedIn's a better source, and you had two candidates, one from LinkedIn, one from Indeed, which one's the better, possibly that might help you make your decision. Also looking at maybe where people worked before, maybe in certain positions where they went to school, because tracking those kind of things, where they went to college, maybe what their degrees are in your system, can give you that reporting and go, boy, these people really fit, as well as helping your employees build a community. Certain things you can share, and depending how big your organization is, they can have little employee groups and a community of people that went to Columbia or people that went to Rutgers. So it's really, I think how we can help is really our systems that we have and our people that we have helping you, build this, because a lot of people don't know how to, where am I going to start? Well, it's something we need you, and we can help you, and we can build it for you and give you the tools that you need.
Hey, John, those are great points. Have something else to add that I've recently been aware of. There's a big transition in the workforce from a management perspective in the boardroom of companies or the executive team. And millennials are obviously moving into that role more and more. And the one thing that they're going to bring to the table that some of the existing corporations don't have is technology. They are going to leverage that and bring that into the workforce. So that is clearly some great information on how you can help your company from an employee perspective in demonstrating that you are part of that technology movement.
Yes.
Yeah, I can add to that technology is definitely a driver, and it helps attract and retain top talent. So in HR, we speak about the red carpet, that onboarding experience. So if you're a corporation, like I said, the culture, if you're looking to get that hot shot at a Stanford, MIT, NJIT, and they're applying to your corporation, they'll fill that out. They'll want to know that the company that they're about to onboard is forward thinking. The process is easy, right? If you're stuck in a stone age, and onboarding, even at a trivial level, if onboarding is difficult, cumbersome, paper driven, they'll second guess it. They'll say, hey, is this a stop for me? Is this a layover? Am I going to go on to greener pastures after this? Or is this the real deal? I'm looking at this as a longevity. Yeah, I mean, because there's a war on talent, and I think employers, right, in the small to mid-size space, for some reason have been conditioned a little bit, especially if it's a manufacturing company. Hey, you know what? I can't get the A engineer. I can't. They're going to go on to GE, or they're going to go on to Google or Facebook. I'll settle for that B player. And I think they've been conditioned that because of their size. And I think that's changing, right? I think the smaller mid-sized companies right now are say, hey, I can compete with the big guys. I can get that talent, so we can scale and grow. So obviously you can tell I'm passionate about it, and I could talk about this more. I don't see any other questions on my end. I don't know if anyone else sees any questions on their end.
No, not at all. I guess I want to thank everybody for coming out. Seminar. We also do them in person. We have some in-person meetings we do usually on a monthly basis. It'd be great for anyone local in New Jersey that would like to. But thank you for your time. And we'll be reaching out to you with the gift cards.
Thank you, everybody.
Absolutely. Thank you, everyone. I guess this concludes
Happy
our
Thanksgiving.
presentation.
Yeah, happy Thanksgiving.
Yes.